Let's talk a little bit about expectations. The term expectations will be super important in your future trading. This is really simple. We need to know what to expect from every given trade. We cannot just buy a stock or any kind of a product and expect it to grow forever, infinitely, or for it to fall forever and infinitely. We cannot just leave the trade because we have a small plus or a small minus, or because we don't feel great. A lot of traders, when they trade, they do not have any expectations from their trades. They actually expect nothing. They just find a place to enter, they do it, and then they just look at it, I guess, and they only leave the trade because they get scared or whatever else. And they have no guidance whatsoever. And one of those guides are your expectations. And the expectations, they cannot be based on your thoughts that, oh, well, I think that this looks quite sharp, or this looks hot, or this looks red or blue or white or whatever. No, those expectations, they are not subjective. They are actually objective, which means that they are more mathematical. You must have an expectation for each trade that you do. The most basic way of having and calculating an expectation is actually calculating the power of the market and measuring the volatility of the market for any given moment. So let me show you how this is done. So here we have a 1 hour chart, and we have quite a nervous looking market, but nevertheless we have a few waves. Here's one top wave, another one, and another one. And to measure the power, which is more technically called the range, we can use for the visual purposes the levels, and we can measure the range. So here we have on the right column the point amount is 13,306, and on the bottom is 13,131. So roughly 170 points. So this wave right here is about 170 points. This one here is smaller, but it's still around 100 plus points. This wave right here is also around 150 points in range. So within this one wave, the market moved 170 points up and 170 points down. Now, what does it give us in terms of our expectation? If we were to enter into, let's say, the falling prices anywhere from the top of the next wave, so let's say around the top of this wave that is actually developing right now, then could we expect our trade to go, I don't know, more than 150 points? Of course not. Why? Simply because our range is around 150 points for this piece of the market that is happening right now. And as we can see, this wave started going down right in the middle of that range. Well, that's quite easy to see. So here is the top of the range, here's the bottom of the range, and here we have the middle. So we have to divide 170 by 2. So that gives us roughly 85 points of range that we can expect from our trade. It's not the way that good trading works. So okay, let's remove these levels and let's go to a smaller time frame. Let's go to 5 minutes. Let's see what's happening right now. All right, let's see. We have quite a few waves here. We have this top wave, quite a long one down, then this top wave and this top wave. Now let's take this average looking wave in here. So we have 13,217 on the top, and the bottom is roughly 168. So the range is around 40 to 50 points. So if we were to enter anywhere around the top or the bottom of this wave right after it happened, our expectation from our trade could be not more than 40 to 50 points. We cannot enter in this kind of a market situation into climbing or falling and expect to make 200 points. This is insanity. Now, just statistically, we can see that the waves are around roughly 40 to 50 points, and statistically, this is what the market will probably keep doing for the rest of the day. Maybe not, but statistically, it's more likely that the market will stay in those boundaries. Yes, it is possible that the next entry will end up being a 300-point move, the next trend development. Yes, of course, it is possible, yet it is less likely that the market will move more than a daily average. So, and as we can see here, having 40 to 50 point range of a move, this is something that I would keep in mind when I would have an open trade and when I would have a profit. If I would say a profit of 20 points, if there is no weakness yet, I'd keep it. 30, 40 points, I would keep a close eye on it and I would be looking for weaknesses. So in this way, having this kind of an expectation in terms of the potential of a move, I expect to trust a signal in the opposite direction, so the weakness and the point of a turn of a trend, if we've already gone this expected range. Now, let's say we open up our computer, we start trading, and this is the picture that we see. So there are quite a few really tiny candles and really tiny waves, and here is some kind of a strange broken wave. But in this kind of a situation, the range and the expectation is going to be really small. So let's take a look at this wave right here. So 227 and roughly 203. So I would say that the expectation can be around 22, 25 points at a maximum. And if we were to find a nice entry in this kind of a market circumstance, I would not expect more than 20 to 25 points from this entry. And perhaps I would expect to make around 17 to 18 so that I would be right below that maximum expectation range level. Now here is a more extreme example of a super small range. As you can see here, we have a few really hard to identify waves, but they are there and they are still waves, really small ones, and the range is as small as 5 to 10 points. Now, if I were crazy enough to enter into a market with this little movement, if I were to see 5 to 10 points in plus, I'd probably just leave it right away, right there and then. Or I would leave it at the first and the smallest weakness that I see of the trend that I am in. So this is pretty much what I wanted to share with you in terms of the expectations at this point. We'll talk a lot about expectations later, how to calculate your stops, how to calculate your take profit, your risk management, money management, depot management, and all of that will have a lot to do with expectations. But as of right now, this is the basic and general concept of understanding expectations and how to use them and how to look at the market and expect correct and having correct expectations from your trades. Because if you don't set expectations and you do not expect anything from your trade, you will not know when to leave the trade, and you will be leaving for no apparent reason. You will be thinking and not seeing, which we'll talk a lot actually about this concept as well later. And it will bring you a lot of negative trades and a lot of frustration when you do not know what you're doing. So please remember this. It is extremely important. Using this correctly in combination with other things will lead you to trading success. All right. Good luck with your test and enjoy your homework. I'll see you in the next lesson.